The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, folks, good afternoon. We're going to have Mark Douglas as our guest at the half hour. So you have any questions, we'll give him a call. That's 877-927-6648. That'll be at the half hour break. We'll start out the commodity show today with a pattern that is completing on a long-term basis, and that is the wheat contract. We had a large ABCD pattern forming here that you can see that started way back before Christmas, and it is ending. It looks like it ending today. And remember, we have combust tomorrow, you know, Mercury Venus conjunct. So that's going to be a real interesting one because that has a high probability of turning a lot of things, and it could even make the stock market rally a little bit. We had a pretty good, ABCD pattern form in the NASDAQ today, right at the bottom. It was absolutely a perfect number, just under the 4,100 level in the NASDAQ, and the S&P hit the number at 1981, so 81 and a half. So that could be, we could be getting a little bit of a bounce here, but I think that's all it is. It should be much lower in stocks over the next few weeks. This is just really turning badly. Folks, Basil has really got a handle on this VIX index, folks. When this VIX index turned, that's when the market turned. Boy, it's an amazing thing. There ought to be some type of an oscillator that you can get, or a overlay, some type of a correlation where you correlate the VIX to the S&P, because when the other one flips, it's just a reasonably amazing correlation. I was listening to Basil and watching the numbers, and it was really quite amazing, what actually happened. So it's quite a powerful tool, in my opinion. I don't know how much it trades intraday or anything like that, because I'm not interested too much in that type of thing. But I did want to just to mention to you today, just to bring the chart up, and you'll see that this is making, 3 lower highs now since the big high that we made way back in October. Today's high was spot on at a Fibonacci number, just like the other ones were. So that's what turned the market. So we might have a pretty good bounce here in stocks if we can get above the 2,000 level in the S&P 500. That would be what I would be thinking if it does that. But overall, it still looks, much lower to the downside, without any hesitation on our part. Now, on yesterday's show, we talked a little bit about the weekly chart that we have in the biotech index. And that is one that I wanted to bring up and show you folks, what we've got going here right now, because we've had these patterns known as hammers or shooting stars forming. These are some of the more predictable of the candlestick patterns. And as you can see on the weekly basis on that biotech, if we close anywhere near where we are now at 318, in the 318 area, this is going to be a pretty significant shooting star pattern. And that's the last of the indices that has made new highs. I mean, we made new highs in the Dow and the NASDAQ and the other one. This has been the most bullish of all. And if this is the top, we could start seeing some, selling coming in on some of the other things that we're looking at. So I wanted to bring that to your attention because I'm not on the show tomorrow, but kind of watch that. As long as we're trading below that 318, 319 level in the biotech index, that would signal that that index is probably top. Now, the best way to do this, of course, would be to pick out a few stocks in the biotech group, which I don't know very little about. It would be the understatement of the year. So I would think that we're probably looking at, some of those real big, high-priced biotech stocks, and I imagine they're really quite crazy. Okay, let's get back to the grain markets here because we have a real nice pattern here in the soybean market that's completing. We have a Gartley pattern forming. Remember, we had a really nice ABCD in the wheat, if that is correct, at the $5 and a penny per bushel level, and now we're right down to the 970 per bushel level in the March beans, and so that's beginning to tell us that we should be getting ready to look for a potential bottom here with this Gartley that's forming at that point. The risk here on these is about 20 cents because the soybeans move around quite a bit. In wheat, the risk is a lot less. It's only about 10 cents. So that's one of the things that we want to bring to your attention today. We also want to move over to the meat market because last week on the show we were getting ready to complete a big Gartley pattern, which we in fact did. And I will bring this up to let you folks see this. This after the cattle topped up there at the 172 level, they broke well over 23 cents, which is quite a bit of money. That's a little over $11,000. And we did complete the very large ABCD pattern that was there. That completed earlier this week, 3 days ago, and now we've had 2 days of really strong strength coming out of here, and we should rally like the last rally was 12 cents. We should get the cattle back to about the 162 level, up about another 8 cents from where we are right now, and then I think it would be a spot to sell them again because you'd have the lower tops and you'd be selling into a lower top at the 61% retracement off the January high. And that would tell you that you're certainly in the direction of the downtrend, with the live cattle, the way that it sets right now. We've had a lot of things happening in these commodity markets these last few days, hitting some serious spots, and none more serious, of course, than the gold market. We want to take a look at that here. We're having a nice correction. We were we were definitely expecting this correction to come in because we had went up to that 61% retracement up at that 1305 level, and from that level we've sold off quite a bit, and now we have to determine where our next buying opportunity is going to be here in the gold. Let me get this chart up, and then we'll do this together so we can see it. We've gone from 1131 all the way up to 1308. So that's what, $170. So $170 on the upside. So if we take 61% of that, that's going to take us down to about the that'd be around $1,200 level. Would be spot on what we'd like to see if we could get the gold to come down to that level exactly at 1,200, and that would also be the 786 retracement of the low that we made way back in January. So this is the area where we want to be looking. I'll put this line in so you can take a look at it, and you'll see that it's a pretty nice channel that is forming here in the gold market, and we've got a chance here if it gets down here over the next few days. That's ideally what we'd be looking at. But we have a really wide-ranging bar today, with gold down well over $27. That tells us that we are $30. As a matter of fact, we're really looking at that. We'll see that what we're looking at here. So we're watching here at around $1,200 an ounce is what we're watching for gold. That would be down $100 from the top, which would be the 786 off the January low, and then also off of the November low. Now, the key here is you want to take this market took 3.5 weeks to get up here in this last run, and it's been 6 weeks, 2 months from the run, because we've been up 2 months and we're only down 7 days. So it's going to take a couple weeks for gold to consolidate down in this area. We might be off on the price. Maybe it'll be higher. That would even be more bullish. But now's not the time to buy the gold. It's just not the time to buy the gold. There's just no question about that, in my opinion, of course. And since this is our show here, I guess my opinion counts a little bit, so we'll see what happens. We want to take a look at silver because it has been weaker all along. We mentioned that last week. We mentioned it again yesterday, and you'll see here that we've had a Fact is, we're almost at the level of the where the gold should be. It's come down $2 an ounce in silver. That's a $10,000 drop in just a matter of a couple of days here. So we've got to be able to really be patient here on the silver. This is a big, wide-ranging bar down, folks. We haven't seen a wide-ranging bar down like this since well, the one in December was when we had the big washout down there, but this has been a big drop today. We're well over $1.30 an ounce, which is see, that's $6,500. That's a big hit in the silver market, and with that long-ranging bar, that tells us that we probably got more to go to the downside with a great deal of confidence. I would think that would be my assumption. We've had a question about the overall VIX index of how do I view it? And basically, I listen to what Basil has to say, and then all I do is I look at the fib numbers and see what the pattern looks like. And today in the VIX, we had those lower tops, and we should have popped through above 22, I would think, but we didn't. We got to 21 and change, and then it backed right off again. And the timing of it is what it was amazing, because as soon as the VIX index started to roll over, the stock market started to rally. So that's a really nice way of looking at an oscillator. I guess it's a fear and greed type oscillator to look at, but that's one of the things that you want to keep in mind. So those are some of the things that are pretty significant happening in the commodity markets. We've got wheat and soybeans. Corn doesn't show very much. It looks like it's weak again today, and I believe that we're still going to go lower in corn. We're down at the 50% level now of the last move that we had. And it doesn't appear that I can't see a pattern here to buy corn where there was a pattern to buy the wheat. So I prefer to buy the wheat than the corn, even though corn appears to be a little bit stronger here. The pattern in the wheat is very, very clear. The pattern in the corn is not nearly as clear. So I have to go with the patterns, because that's the lady that took me to the dance, and that's who I will dance with. Now, I wanted to bring up the gold and silver index chart, the XAU, because we had a pretty good rally in that off of the bottom, that double bottom that we had off this weekly chart. We did have a small little Gartley formed just last week, and now we're having the correction, which is expected, because after we've been up for 5 weeks, you're expected to see something. The difference is that we're having this big downdraft now in gold and in silver, and that's usually telling us that we're probably getting ready for something more on the downside, would be my opinion. So we'll have to let the market tell us. We're going to take a little break here now. We've got gold down about $30, stocks up about 70 in the S&P, and euro is basically unchanged, down a little bit on the day now.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm shifting gears here a little bit because I want to give you an idea of some of the things that I do. And basically what I've done here is I've put up the long-term chart of the Aussie US dollar cross rate. I do a lot of consulting in down under. And when I was back there in November, we were watching this pattern to come in at 79.50. It lined it up just absolutely perfectly at that time. And of course, as you can see today and starting last week, the market started to break below that 618, and I believe in these numbers so much that, I almost should have them on an epitaph, I guess. It probably will, who knows. Anyway, what I wanted to do is what I was showing the folks down there was that the correlation between the Australian dollar and the Australian stock market is just absolutely incredible. So what I'm going to do now is I'm going to put up the EWA, which is the ETF for the stock market in Australia, and you'll see some of the nice patterns that are there. But the main one that I wanted to bring to your attention is where we are right now. As you can see, we made a perfect ABCD bottom right around December 15th when we had that big cycle bottom in the stock market, which is a huge cycle, folks. That affected everybody globally. Just mark December 15th on your charts. When we go below those lows, look out. It's going to be pretty nasty, in my opinion. We've already done that, I believe, in one of the indices. I'm not sure, but I'd have to double check it. I thought maybe the Dow had done that, but I'll have to double check that. Maybe I'll do that at the break while I'm waiting for Mark to come on. and then we'll see. But what I wanted you to see here is you'll notice that we had that little bit of a rally during December, and then we've started to break down now, and we're breaking down below some of these lows. Now, my original recommendation was to buy this at the 21.65 level, and we rallied up to 22.47, and now it's starting to break down. So the key here is with that Australian dollar going below the 618, and that's what we base this whole thing on, is to really be really careful here. So you'd put your stop at break even and, you know, not even worry about it, or just exit it because of the fact that it's below that below that 61% retracement. So that's how I try to use the ratios, you know, with a little bit of risk control. It doesn't always work the way you want it to, but it does give you a heads up that, you know, something's not right. You know, this thing should be rallying a lot more. And that's the real key, because we've had some really strong days recently in stocks, even though they've given it up really quickly. They've still been very strong. So what you want to do is to realize that the strength doesn't always go to other parts of the world, and that's certainly what's happened in the Australian market. As you can see, it could barely come off the bottom, only about 5%, when the rest of the markets had made new highs. We made new highs in the NASDAQ, the S&P, and the Dow. We didn't do it, of course, in the New York Stock Exchange Index, but that's you know, really what you know, what we're watching. The other one that looks very interesting here, you'll see that it's causing some problems from the metal standpoint, and that is the platinum market. The platinum market has given back almost $100, well, about $80 an ounce here in just a matter of a few days, and it rallied very suspiciously. It could hardly get out of its own way on this weekly chart, and if we get below that 1180 per ounce level, which is we're only $34 away, we could really start a move down to $1,000 an ounce without any trouble at all, because that's the next level. It didn't stop at the 618, at least it has so far. As long as we stay in this area, we're okay. But if we go below 1180 in the platinum, boy, it's going to have some serious problems, I would think, because it would be breaking some really strong weekly support on this 618 that goes back to 2009. We already know what's happened to copper. You know, it's been a lame duck for quite a while, and doesn't appear to have many friends at all. There is one market that has no friends, and that is the crude oil market, and we still continue to drop. We are going down at a slower pace, I might add, but it's still going down. We're making new lows as we speak. And the last rallies we had an $8 rally finally from 44 up, well, $7.50, 44 to 71, 51 and change, and now we're, you know, not going down, but we're going down a little bit slower than we were before, which is some type of a solace to the people that are in the oil market. So, got stocks under a great deal of pressure. So is gold and silver, and we'll be right back with Mark Douglas after these words.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I think we have our friend Mark Douglas on the line. Mark, are you there?
Yes, I am, Larry. Good morning.
Hey, thanks for joining us today, pal. I appreciate it.
My pleasure.
Okay, listen, we know you have a new book coming out. I would like to have...
How do we know that?
Well, Mark, I think we've known each other 25 years, and since I see you, well, more than that, but since I see you several times a month, at least several times a month, and we talk about a lot, that's my guess that you do have a book coming out.
Okay. Yes, I do.
Can you tell the folks a little bit why you wrote this book? Because, you know, that Trading in the Zone book to me is like a Bible of what people really need to do, and I know you've made some fabulous improvements with this one, but just give us the folks a little bit of a background of why you did this. I mean, I've heard it before, but I think they would love to hear it.
Well, boy, see, I get to give you see if I can encapsulate this and give you a distilled version. I was asked about 8 years ago. I was asked to speak at an investment conference where there was going to be anywhere from 5,000 to 7,000 people. And the trading organization that put it on, I wasn't really that familiar with. And so just to make sure that they were on the up and up, because there can be some real swarmy people in this business, as we both know. And I asked if I could, they had user groups all across the country, and I asked if I could attend some of the user group meetings just to see if they're, if what they claimed that they offered and did for people was close to the reality. And in one of the user groups here in Phoenix, they had over 100 people, and I attended a couple of the meetings. And the people at these user groups were genuinely enthralled with the service that this company gave them, especially in the area of their customer service. But at the same time, these were not people that I would have categorized as your regular trader types. I mean, I started coaching in 1982, and mostly, the coaching that I did was with, professional traders or floor traders at the Chicago Board of Trade, Chicago Mercantile Exchange. And these are, these are hardcore trader mentality types, whereas the people in this group, they were like, I'm described as kind of mom and pops who were taking up trading because, they thought that they could take control of their financial future and their retirement security by being a trader, and basically completely clueless. I really mean completely clueless. And when in the Disciplined Trader, my first book, and Trading in the Zone, when I wrote those books, I mean, I started writing the Disciplined Trader in 1982. And, I don't even know when universities started taking up the idea that trading psychology had anything to do with people's results. But it wasn't until the mid to late 90s that even universities started instituting behavioral science departments. And when I started writing, like I said, the Disciplined Trader in 1982, trading psychology was not embraced by the market community at all. I mean, it was really a hard sell. And so both those books, The Disciplined Trader and Trading in the Zone, were written for people who'd been trading for several years, and came to their own conclusions about how important it is, how important your state of mind is, in terms of producing consistent results. And so when the internet exploded in the late 1990s and early 2000s. It never. I mean, and Trading in the Zone came out in January or December of 2000. It never occurred to me when I was writing that book that there'd be a lot of people who, like in chat rooms and like shows like this, that might say, hey, get Trading in the Zone, and it be their first book. In other words, where Trading in the Zone might be recommended for someone's first trading book to read, it wasn't written for the novice trader at all, because there just wouldn't be. There's so many things there that they just would have a very difficult time relating to. So what I decided to do was, this was back in April of 2007. I thought, you know what, I'm going to write a book for someone who, for the guys that just really don't know anything about the markets, not anything, but don't know it at the level that they need to, and do it from a perspective. And this is what really occurred to me after years of doing presentations. It just in the feedback that I'd get from the presentations, it's like it just finally dawned on me that the reason why people have such a hard time relating to how important psychology is in their results is that because they really, truly don't understand price movement. And so what I decided to do was write this third book within the context of understanding price movement from an order flow perspective. In other words, when people understand how prices move from an order flow perspective, then they can understand why they need to think the way that they need to do to create consistent results. And this is what this whole book is about. I didn't think it was going to take me almost 8 years to write. I thought it was going to, after having written 2 books, I thought maybe 2.5 or 3 years. And it just turned out to be a project that was way more challenging than I expected it to be.
Well, I happen to know you are a perfectionist, so I have seen some of the book, and it is really spectacular, no question about that. Mark, I've been in this business a long time too, but it's one of the things that I think we take for granted is the order flow of what's happened. Can you explain more why you think that is so important?
Oh, Larry, you in 5 minutes. You want me to encapsulize about 10 chapters of the book?
Take 7 minutes. Take 7 minutes.
Hey, Larry, you have such a way of asking such simple questions.
Sorry, Mark.
I could come up with a one sentence answer to,
Yeah, yes or no would be good.
What's that? Say that again?
Yes or no would be good.
You see, the thing is, Larry, it's almost impossible for me to answer that question in a few minutes. It really is.
Are you referring to the situation like you had with the gentleman in the soybeans, where he said soybeans, can't go below 12.40, and the guy picked up the telephone and sold, 40 contract or 1,000, whatever it was. I forget. It was a huge amount of 200 contracts.
In other words, when you understand that price movement is a function of an imbalance between the number of buy and the number of sell orders that are flowing into the pit or into the exchange at any given moment, and then when you understand where does that imbalance come from, in other words, the reasons why price move. I mean, the actual underlying reason that a price can't move to the next higher level unless, for example, if the last price of something was 10, how does it get to 11? Well, in other words, the only way it can get to 11 is if all the bids have been filled. In other words, there's enough inventory, there's enough sell inventory or enough offers to fill all the bids at 10. And if there are more bids at that point than there are offers to fill that inventory, then we have to go to the next higher price to fill those bids. And so the price is going to keep on going up until all the bids have been satisfied. In other words, there's an offer to take the other side of the trade. And when you understand price movement from that perspective, that it's simply an imbalance between the number of buy and the number of sell orders that are flowing into the pit, and then when you understand, where those orders are coming from and why, in other words, all the varied sources of those orders. People generally don't realize that, that, for an example, a lot of the reasons why there's an overabundance of buy orders in any given moment or an overabundance of sell orders in any given moment are coming from institutions or hedgers or manufacturers that have contractual obligations that they want to hedge against. And the price is moving for reasons that have absolutely nothing to do with the technical indicators or the particular way in which they're defining what an opportunity is to buy or sell. And so when they start understanding at a real functional level how prices move, they can start aligning their psychology in a way that they can then execute their technical systems without making errors and without being afraid. Once they accept the underlying realities of of how all this really works.
Mm-hmm. Wow, that's very perceptive. Okay, I'm going to put you on the spot now.
Oh, geez.
Oh no. Well, hey, if I can't do it, who can?
Well, yeah, right.
Hey, listen. If you had to pick 3 things why people, just say the new person come in, person's trading less than 6 months. What are the 3 main things why they lose? Right off the top of your head.
There's a ton of things.
I know there's 1,000 of them, but what do you think would be the top 3?
They can't accept the risk. People, for the most part, people get into this business because in other words, let's put it this way, Larry. Every system vendor and every brokerage firm, they all have their disclaimers. They say, hey, you know what? There's risk associated with trading, and you can lose. But at the same time, they put their advertising message together in a way that implies that if you buy this trading platform or if you buy this particular methodology, that we can sort of guarantee that you won't have a losing trade or you will win. And there's no such thing, and there's absolutely, the risk never goes away. If you're speculating on price movement, I'm not talking about investors. I'm not talking about putting on a trade as an investment. I am talking about people who are using their trading platforms to speculate on what other traders are going to do. In other words, the impact that other traders' buy and sell orders on any given moment or over a period of time are going to have on the direction of the price. There is absolutely no way whatsoever to eliminate the risk or prevent yourself from being wrong. But the problem is that if you go into it with the idea that it's possible, you formulate a belief that it's possible, and that belief will be reinforced. Because every time we get into a winning trade with what we think is a bona fide reason, because we've used a bona fide analytical methodology to come up with that reason, and we win, we think that we know why we won, and the reality is we don't. There is no way to know why we're winning. There's only 2 ways to know for sure why the price moved up or why the price moved down. Is that if it moves up, it's because there's more buy orders coming into the exchange than sell orders. If it moved down, because there's more sell orders coming into the exchange than buy orders. It's that simple. The reasons why those orders are coming into the exchange, nobody knows except for the people who are actually submitting those orders. Mm-hmm. And everything else that they hear from pretty much everybody else. It's all conjecture. They're speculating. I'm not saying that the reasons that people come up with that they hear aren't right about why there might be more buy orders and sell orders. It's just that there's no way they can prove that they're right. Think about it. How are they going to prove that they're right? They got to actually poll all the people who submitted those orders and ask them the reasons why they put them in.
Mm-hmm.
Where are they going to get information?
Yeah, you couldn't do that. Yeah,
that's right.
Wow.
And so the problem is that one of the things that trading confronts us with is that if it's impossible, it is literally impossible to guarantee that we can eliminate the risk. That means that to be successful and to execute our systems appropriately, we're going to have to be able to do it without fear. And to get rid of that fear, we're going to have to be able to act. We're going to have to create a state of mind where we genuinely accept the risk. In other words, it's all right to be wrong and it's all right to lose. We don't live in a society, Larry, that makes it that teaches us that I'm going to teach you how to win by using technical analysis or any other technical methodology. But at the same time, for you to be able to use that methodology on a consistent basis and be able to extract whatever potential there is in that methodology, you're also going to have to be able to learn how to lose without regret. Mm-hmm. Think about that: lose without regret. Lose without emotional pain. It is possible. The best traders do it. The best traders evolve to that state of mind. Usually it takes years for them to get to that point, and most people never get there. This new book is going to get you there.
Wow. Well, I'm going to have to buy a copy,
Guaranteed.
That's for sure.
This new book is going to get people there.
Okay, let me ask you a question, and I'll let you go. What do you, and I know I've asked you this 3,000 times over the last 2 years, is there a date that we might be looking at this coming out?
Yeah, I'm on the last chapter right now.
Mark,
so
you told me that in 2012.
What's that? Yeah,
no,
well,
I'm
Larry,
just teasing you.
Hey.
You think it'll be sometime this spring then?
What's that? Say that again?
Sometime this spring, maybe by the 20th of March?
No, not by the 20th of March. No, for sure. I would say realistically May or June.
May or June. Okay, that's good enough. Listen, I want to thank you for coming on the show because I enjoy talking to you. Even when I don't put you on the spot, I enjoy talking to you. So, hey, thanks a lot for joining us, Mark, and I hope to have you on again. And when the book comes out, or maybe even before, and we can chat some more. But thank you for joining us. Could you tell the folks if they want to reach you, what is the best way for them to contact you?
Sure, just go to markdouglas.com, and if they want, they can put their name on a list of people that will contact when the book is done.
Oh, that's good. That makes it really simple.
My website, markdouglas.com.
Markdouglas.com. That should be good enough.
Yeah.
Well, I hope to see you. Maybe Sunday.
Okay, Larry. Okay.
All right.
Talk to you later.
Tell Paul I said hello.
Okay.
Thanks a lot, Mark. You bet. Okay, folks, that was Mark Douglas, author of Trading in the Zone and the Disciplined Trader. His wife, Paula, actually married Sarah and I, so we are very, very good friends, and we see them all the time. So the book is really going to be something really, really special, because what he talked about accepting risk and responsibility, boy, let me tell you, that is really, really important, because you're the only one that can take responsibility for your trades. That's the problem with people that have money management, firms doing it. A lot of them don't have any skin in the game, and that's a totally different animal, folks. So you've got to pay attention to that for that particular reason to make your own decisions, because you're the one that is ultimately responsible for the thing. And I think it's important that you keep that certainly in mind. So we'll see if that in fact is going to be the case. We're going to come up to a break here pretty soon, I believe. We got stocks still under a great deal of pressure, and we'll come back and we're going to talk about the wheat market again when we get back after the break that we have.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we're going to do a brief review of the first chart that we looked at. That was the wheat chart. It's basically a long-term ABCD pattern that started back on December the 15th, a couple months ago. What was that, 6 weeks ago? And now we've come down. It's completed it perfectly. The low was 501 and a quarter. That's where it measured to. I think the low on the overnight was $5.75. So it shouldn't get below that. So that's pretty much what you're looking at. I also mentioned that we're waiting on gold to see if we can test the right around the $1,210 to $1,200 per ounce level in gold in a few days. It won't happen right away. I also wanted to bring up the Bradley stock market model. We've made some type of a pretty significant top here in stocks, looking at the Dow Jones, which has been one of the stronger ones, but it's been following the Bradley pretty well since December. We peaked on December 28th, going in right after the Christmas holiday, and now we've had 2 lower highs. We're very, very close to taking out the December cycle low, and that is going to be a really important thing to keep an eye on for sure. it's going to be one of the more important cycle ones. Not as important as the October 15th, because that's really a big one. Now, tomorrow we have Combust. That's the Mercury Venus Sun conjunction, and that was done by B. Butini, who is a Vedic astrologer, and that is one of the more accurate things for, calling short-term turns in the market. But sometimes it can be acceleration, so be really careful in here. We've had several patterns completing in the NASDAQ and the S&P today, but if it looks to me like the S&P really wants to go to about 1930. We're trading at 1990 right now, but it looks like 1930 is where it wants to go on this move. Now, the Bradley model, as you can see, is basically pointing for the market to go down pretty much one way all the way into April the 27th. There are very few really key dates. The last one we had, of course, was on the 28th, which marked the top of the market. So whether it's going to continue following like this, we'll have to, wait and see. But we're going to have really big swings. We're having triple-digit moves in these markets all very regularly. So it's a pattern recognition trader's dream, because you go down to one number and then you rally up and hit another number. One other comment that I wanted to make is we talked about the euro this week bottoming down there at that 111 and change. As long as we stay above 111 and change, we still have a bullish scenario in the euro. The spot where it's topped yesterday at 114.22 was a perfect ABCD correction over the hourly chart from Sunday night. So we are still in a bear market, but there is a chance here. And also the same thing in crude oil. I think sometime in the next few months, I was joking, in the next few days, we're probably going to see a pretty significant bottom here in crude oil, because heating oil is not following through and gasoline is actually gaining some ground. So we got to be getting close here, but not quite yet. I think somewhere around $42 to $41 a barrel in crude oil might be it. But the whole world is certainly bearish this. I mean, there's not anyone that thinks crude oil can have more than just a very, very short-term rally, and I mean short-term. That's, the bottom line of what we're looking at. So just keep that in mind as you're looking at some of these charts. And nothing goes up forever, nothing comes down forever, with the exception of Apple, and that always goes up. All right, one last question someone had was about Apple and what's the next level of resistance. The only thing I can see is up around the 121 level, which is 1.27 of the last swing. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.